I use the ATAS platform, like I said earlier, so ATAS. For those who are interested, please check out the ATAS platform. It's simply just a Google search. You can use the ATAS platform, download the ATAS platform, and you have access to a lot of settings. Now, I will be going over my settings in the next video, but for now, I use the ATAS platform, and you have access to the volume, the delta, and bid and ask data. So everything will be there for traders to use. It is a very systemized platform, very complex, but you can simplify it for new order flow traders, right? So I use the ATAS platform to trade on, right? Okay, everyone, welcome back. Quick trade recap here on the ES that I took. So about $450. Nice profit today. Very quick trade in and out within, I think, about 12 to 15 minutes, something like that. So we're just going to quickly go over this, right? So again, to quickly give you some context, we had a huge sell-off from FOMC. I wasn't really considering this in my overall trade thesis, but prior to the session, of course, I share the pre-market game plan. So what we had over here is we had a fair value gap. Price gave a 15-minute fair value gap, and this is essentially the zone I'm looking to trade from. This is the 15-minute zone I look to trade from. So whenever you trade, you need context, location, and the why. And the why is what I'm going to be going over briefly in this trade recap. So the context is, of course, we're below the weekly opening. We've had a very large sell-off from FOMC, and we could be looking to take some potential longs as we're below the weekly opening. That was kind of the thesis for the context. Context also is that we haven't taken out the Asian low, so be mindful that when price takes out the Asian high, the Asian low typically does get swept, right? So we've also had a pretty large wick over here. So again, context wise, we're looking for kind of sells going off from the heavy FOMC, but not looking to hold sells for too long because of the large sell-off. We're below the weekly opening. In terms of the context, now location, we're looking for buys at a bullish fair value gap. So this is the bullish fair value gap, and this is essentially the trade I took. So of course, we're being patient and waiting for price to come into the zone. So as price comes into the zone, I often will very often I'll look for two mitigations into the zone. I'll look for two drives into the zone. And how that works is like this, right? So notice how price comes pretty aggressive into the zone. We have one tap over here and we have another tap over here. So now if we continue to play price on, I'm analyzing these 1 minute candles using the order flow. And the way I do that is by this thing over here. So this is the same chart as this. They're the exact same chart. Now, if you look at the candles over here, right, let's just jump up to the 5 minute and quickly explain this because this is a 5 minute chart. When you look at the 5 minute chart over here, this is the candles you're looking at. What you see over here is a ton of aggressive sellers that aren't being rewarded. So when you see a lot of red over here, this means that there's lots of sellers that are trying to drive price down in real time, but none of those sellers are being rewarded. And what that tells you is that there's passive buyers sitting at this level. So if we go back to the charts now, we've established in this 5 minute candle, there's a lot of aggressive sellers. Even though it's a green candle, there's more sellers than buyers at this point, more aggressive sellers than buyers, sorry. So once we have that in place, when we have a lot of aggressive sellers over here, but price can't break through this zone, we actually have a break above this zone. This tells us the zone is strong and it's being supported by passive buyers. The passive buyers are absorbing the aggressive sellers, and this over here is what gives you the long position, right? So again, we want to enter long at the zone. We want to have a stop loss, ideally not necessarily at this low over here. We want to have a stop loss just below the candle body over here, and where we're looking to target is the most recent data low, right? So I like to be kind of in and out of my trades full volume. I don't hold partials or anything like that anymore. Refined approach 1 to 3 hour trade. This was a 1 to 2.5, right? So this is how the trade essentially panned out. And it all comes down to using this, the order flow, right? So we're looking for aggressive sellers, aggressive sellers, aggressive sellers. And none of them were rewarded, which means that the fair value gap is holding. There's buyers present. Buyers are in control because the sellers are failing. And we also see aggressive buyers step in. So we see a sudden switch in the delta at key levels, which is essentially the bread and butter of how I trade. So location is fair value gaps, and the why comes down to the order flow. The why comes down to who is aggressive and who is passive. The why comes down to the change in delta and who is failing and who is being rewarded. Aggressive sellers fail. That means buyers are being rewarded because the bullish fair value gap is holding, right? So whenever you trade ICT or breaks of structure or however you trade, you want to take into account how buyers and sellers are actually behaving at key levels. indicator. But this indicator alone has to be used with other concepts. Let's break this down, right? You need to understand the liquidity sweep. Liquidity is very important because it gives you context on where the manipulation has occurred, right? So let's just break this down in terms of ES. This was on the 17th of March, right? So yes, we have an Asian range just over here. This is the Asian range in orange, and this is what accumulates liquidity, right? This is the accumulation phase of the market. So I'm just going to put dollar signs over here. This represents buyers and sellers exchanging at a fair price, right? We have an accumulation. It's a low time of day. So now we have a manipulation just over here. So price has taken out this Asian range low, and we have a manipulation just over here. This you can refer to as the ICT Judo swing or the turtle soup or any of these other fancy names, right? For me, I just like to call it a manipulation. So this is our manipulation. Let's just label that in here, right? So manipulation, right? If I can spell that, that's manipulation. So once we have a manipulation, you're now looking at the next thing, which is fair value gaps. And fair value gaps is the lifeblood of my trading, right? Fair value gaps is probably the only ICT concept you need outside of the power of three, and it is the most important concept. So fair value gaps, right? So let's